Tesla down at one point over 300 points today with a slight recovery is our subject. This is Greg for Tesla Fan Insight. Thanks once again for joining us. If you're a subscriber, we appreciate it. If you enjoy the show, please take time to like and subscribe. And if you're a competing show, please just do us a favor and don't copyright violate us, please. What happened today is that I was relaxing after the close, and several people kind of asked what happened. And I was a bit surprised because we kind of explained that this happens regularly with Tesla. And so I decided to come on and sort of articulate what occurred, why, how it's done. And that way, when it happens again in about 3 weeks, you'll be ready for it. And then it'll be happening again 3 weeks after that, and you won't ask this question anymore. So basically, if you watch the stock today, it should have been a nice opening, up $50 or $60, but it ended up giving away its opening upgrade and dropping another $150 to boot. So the first part of the process is that you actually sort of look at the stock, check the news to see if there's any news that might be impacting it negatively, and then you go from there to sort of determine what might have occurred. And in this case, there was no company news or activity that drove this or major news story related to it. So the next culprit might have been to take a look at analysts to see if there were any downgrades or something of that ilk that might have caused it to do this dip. No downgrades. So this brings me to the third and most likely culprit from a deductive reasoning standpoint, and that is that manipulating Tesla stock price is actually extremely lucrative. And therefore, if you're going to be an owner of the stock, you've got to sort of be ready for how this process works and the fact that it routinely happens, even at times when you would expect that the stock price should be up very strongly. So I wanted to take you guys back as a way to articulate what occurred here. Sometime, I believe, in February or March, there was an earnings announcement there. And right after the earnings announcement, the stock went from $956 all the way to $700 and then finished up just below $750. And so we all went through this process and we were stunned to see the stock price on good news drop $150 and the next day do the same. And it was a very strange deal. And then there was a news report that finally came out to explain the details of what occurred. So basically, I think there was a 5-step process. Step number 1 was there was a story placed in MarketWatch that was somewhat negative on Tesla. That story that was placed caused a slight negative movement in the stock. The second component of what occurred was that the individuals who wanted to manipulate Tesla's stock price actually purchased 2 million shares, or they borrowed 2 million shares of Tesla's stock price and had to pay a fee for that. And then they sold the stock price, or those 2 million shares, I believe it was between $9 and $20 below market price. And what this did was, between the news report and the selling of that stock below market, it was a sign that there was some folks that were expecting this thing to fall. What then happened was the selling of that stock below market actually brought it just below $900 a share. What this then did was it triggered all the people who had stop losses at $900 to sell at that point. So this triggered a large amount of selling related to the 900 stop loss, then the next sort of stage of this was that many of the hedge funds actually have bots that sniff the web constantly for stories or other things that might be moving their stocks. And they're actually trained to sell out the entire position of the fund immediately once sort of this negative cascade starts occurring. So first you had the folks who were stopped out on their stop loss selling. Then you blended the stop losses, excuse me, with the bots doing their sales. And so that combination was kind of lethal because it immediately forced the stock price down, between 50 in the range of $50 to $80. So as we closed in on $800 a share down based on these two variables, you now started picking up 800 stop losses as well and another round of selling. So as you know, the bots are programmed such that they sell quickly as possible to get the fund out. Then what happens is that the fund managers can come back in, see if there's material reason why this drop occurred, and they will then buy back in, which is kind of what we saw today, if everything is okay, or they will simply stay out as a way to make sure the coast is clear before they expose their money to risk again. So we wanted to kind of review this because in the case that went down 6 months ago, they explained that the people who kind of started all of this had actually borrowed 2 million shares. And those shares were borrowed when the stock price was at $9.56. And when the stock price actually fell to $700 a share, they were now able to go repurchase the exact same shares at $700 and give those back to the people that they'd been borrowed from. So now, when you calculated everything, it turns out that there was a $700 million profit that came about because of how well this process was actually done. So I kind of bring all this up because in the case of that trade, what had happened was that there was a fairly smart market person who had put in a couple of $1 million to buy long calls on Tesla. And it turns out that for that date, if the stock price of Tesla had ended up above 750, the firm or market maker that sold the calls stood to lose a very large amount of money. So instead of losing that money, they were able to use trading technique to actually kind of crush the short sellers and make a profit for their firm as well. So I wanted to kind of review this trade that went down with you because, notice some of the rudiments of what occurred today. First of all, stock started falling immediately on open, and then it crossed to that back through the 2000 level. But I didn't think there was that many stop losses sitting there already, but it's entirely possible. But the downdraft of the stock through 2000 seemed to gain momentum from there, and one would think that that momentum gain was driven by the bots being programmed to sell. So once you're in a sell situation relative to either the bots or people doing stop losses, it's actually a market order. So the order doesn't actually get filled until somebody is willing to take the other side of that trade. And if they don't, you could actually see the stock continue to fall a long distance until you can find the other side of the trade, in this case, a buyer for what you're trying to sell. So my take on this is that I thought that today was a pretty obvious circumstance of great trading by sort of market makers or market maker caliber folks. You can't have 2 or 3 firms collaborate to make this happen because they know it's going to happen and they want to take advantage of work that's going to be done by somebody else. The other thing that goes on is the fact that there are a lot of people who may be trading on their own relatively with their own funds, but they used to be sort of senior level people in big firms, so they can coordinate their trading with folks who may have a lot more capital to work with. So I was kind of intrigued by this whole situation because we kind of talked about stuff like this happening like 3 shows ago, where we had a lot of people watching, and we explained that there's a run for the hills that seems to occur for Tesla. You know, every 4 to 6 weeks, there's a major one, like 300 points, 400 points down, but it's gotten pretty routine for it to occur, and it's definitely once a month now, but sometimes it's twice a month. And, you know, it also seems that one of the best times to do these manipulations is when you have a situation now, like what you have with all this great news and the split about to occur, et cetera, et cetera. I think it's just a prime opportunity to take advantage of regular consumers as they're trying to just make a dollar. Now, I'd have to say that the other question mark is, you know, how do you protect yourself against this? One of the suggestions we've made is that if you're going to carry a decent sized portfolio, you kind of want to carry about 3% of the portfolio in puts as a way to sort of catch this downdraft as it's occurring and make sure the damage to your portfolio isn't really bad. So you kind of have a few options. One is to just grin and bear it and sit it out because you own the stock and you own it long and you're going to stay in it long. So it's no big deal to drop 200-300 points, which actually is a decent amount of money for a stock this high. Another technique is to yourself introduce stop losses into your process. The one adjustment I would make to a stop loss is don't do it at the 900, you know, at the 00, call it 1400, 1500, 600, whatever those numbers are. How about $20 above or below that number? That way, if you do end up being triggered, you don't end up being taken out at this, along with a whole bunch of people at the same price point. Might be a good idea. The third thing is that doing puts is really hard with Tesla because it's such an expensive stock that there are puts that you can do out there to prevent from losing all your money, which would just be 2 to 3% of the portfolio. But if you're seriously trying to hedge a portfolio that's large, you actually got to spend a good 10 to 20% of the value of that portfolio in puts, and then keep maintaining those puts over time to ensure that you don't get destroyed. And so that insurance that you're using is actually kind of expensive. That's why a lot of people either do not do it or they do it in small amounts that would catch a catastrophe, but maybe not a routine pullback like what occurred here. The other thing I wanted to note here, I thought was interesting to watch, I don't know if you noticed, was on Friday, we actually had a pullback from the 2090 level all the way back to like 2041, and it ended up below 2050. There's a lot of people who own call options right now, and forcing them to expire worthless, or when we get to Friday, or doing manipulations that actually drop the stock price significantly, has become sort of a blood sport that's routine for Tesla. So I would have to say that, you know, welcome to the big leagues, because there aren't many stocks that easily can be manipulated into big movements of price like Tesla can. And based on that, there's an inducement for the folks who are good at this to keep doing it more. So it's unfortunate, but I do think that it should be something we expect at least every 4 weeks, but it possibly could be every 2 weeks if there's a lot of money on the table in the form of people leaning heavily on call options and folks being able to manipulate the markets to take advantage of those owners. At any rate, I'm actually looking forward to what your take is on this, whether or not the data or the conversation fits the data you're seeing as well. We want to please encourage you to like and subscribe and hit the bell icon so you don't miss anything. This is Greg for Tesla Fan Insight. Wanted to say, tschüss, German, au revoir, French, le Hebrew, Choda Hafez, Farsi, hey do, Swedish, Zdravstvuyte, Russian, hello, ni hao ma, hello, Chinese, assalamu alaikum, Muslim, and in Jamaica we say enough respect, wakud, Thanks for joining us. We look forward to enlightening comments, if possible. And we look forward to our next conversation with you. Have a great day, and bye for now.